What's up, everyone? It's Scotty with MoneyVest. So I think it's time for us to really talk about Nvidia. So we briefly touched on it in our previous market update, but I really wanted to talk about the absolutely ridiculous numbers reported by Nvidia. And honestly, like it's a very unusual for, I guess maybe not so unusual because of the overall trend with artificial intelligence, but unusual in a way for a company to grow at such an insane and jaw-dropping rate. Like, this is astronomical. And the stock wasn't really moving all that much after hours. I mean, there was some momentum, right? So after hours, we did see, the stock price kind of drop close to 8%, trade down to 4, I think 490s, was it? A little bit lower, maybe even 470s, and then push right back up to $490 per share. So basically almost down close to 2%. And that would be the surprising piece, that after a company reporting such stellar numbers, how is it possible the stock price did not move? Maybe I've got an answer for that. But revenue here up at 206%. $18 billion in third quarter fiscal year 24 compared to 13.5 billion in second quarter fiscal year 24. So quarter over quarter up 34%, and year over year up 206%. Just like I said, ridiculous numbers. And margins here up to 74% gross margins, and that's up 20 percentage points. And we got operating expenses that are mostly flat. How the heck is this company doing this? $2.9 billion, only up 16% year over year versus 206% growth in revenue. Man, talk about efficiency, talk about operating leverage. Operating income 10.4 billion, up 1,000%, and net income up 1,259%, 9.2 billion. Okay, so there are some things to consider here because, of course, same time last year there was a lot of intangibles amortization. Not to mention, company did go through a lot of one-time expenses, which did lower their gap earnings. So as a result, when those are taken out and they're adjusted for 1 year later, 9.2 billion does seem like a pretty substantial number. But even if you take a look at this right here, non-GAAP, we're looking at 588, 600% growth on a year-over-year basis to over $10 billion. And if you do the math here, $10 billion for $18 billion, that's over a 50% margin. Nvidia, what the hell are you doing? I'm sorry for the language here, guys. 55% net margins here. Absolutely ridiculous. And earnings per share up to $4 per share, up almost 600%. And this right here is their guidance. They expected $20 billion in the fourth quarter of fiscal year 24, give or take 2%. GAAP and non-GAAP gross margins of 74.5%, 75.5%. And then, of course, they're expecting non-GAAP tax rates expected to be 15% plus minus 1%. Operating expenses expected to be $3.17 billion and $2.2 billion respectively, which again is lower, significantly lower than what they are looking at revenue growth here for the company. So my fair value will get changed today a little bit. It will get pushed higher. So data center third quarter revenue was a record $14.5 billion, up 41% from previous quarter and up 279% on a year-over-year basis. Data center, I mean, there's a significant demand for H200, GH200 as well. A lot of these GPUs that have significant computing power, not only from an AI perspective, from a Bitcoin mining perspective as well. We learned earlier that Oracle, an Australian mining company, a lot of these are buying in bulk, like they're buying millions of dollars worth of these chips because they're so powerful. And Nvidia is kind of struggling to keep up with all this demand, right? So they also mentioned in one of their reports, which I think I can go over here, the GPU demand continues to outpace supply as Gen AI adoption broadens across industry verticals. And again, they continue to cite a strong buy rating. We're not overly concerned about competition and expect Nvidia to maintain over an 85% share in generative AI accelerators, even in 2024. This was Srijani Pajuri and Jacob Silverman wrote in a note on Monday at Raymond James as well. So, every single segment of the company here grew. So data centers up 41% quarter over quarter, 279% year over year. We had gaming up over 15% quarter over quarter, 81% year over year. And professional visualizations was up 10% quarter over quarter and 108% year over year. And automotive was up 3% quarter over quarter and 4% year over year as well, with a excellent excellent income statement. I mean, I have literally no words. Net income $17.47 billion in the first 9 months. And if you account for, let's say, $10 billion in the fourth quarter, we're looking at just shy of $28 billion in net income for fiscal year 2024 from Nvidia. So $28 billion is a pretty sizable jump here on a year-over-year basis, and balance sheet has only gotten better with a significant increase in cash from $13.3 billion to over $18.2 billion out there. So that's really where we are with the balance sheet, and the debt levels have gone down. So long-term debt has gone down from 9.7 to 8.4 billion. So basically their overall liabilities are $20.8 billion, and they almost have as much cash at $18.2 billion. So that's, again, a phenomenal balance sheet nonetheless. Total assets sitting at $54 billion. This right here, again, Wall Street estimates have been crushed. They also did mention, the CFO mentioned, that we expect that our sales to these destinations will decline significantly in the fourth quarter of fiscal year 24. Though we believe the decline will be more than offset by strong growth in other regions. And that's one of the things that I think now Wall Street's going to start to realize and understand is that, look, as the company gets bigger and bigger and bigger, and the numbers are now in the hundreds of billions of dollars, because it's most likely the company is going to do revenues of, I want to say, $70 billion, right? So they're going to do another 20 billion in the fourth quarter. So 38 plus 20, we're looking at 58. So just shy of 60 billion actually is going to be the revenue number. And next year they can kind of approach closer to that $100 billion mark in revenue, depending on how quickly AI adopts and transitions and what the demand looks like. And of course, with respect to competition too, because, Microsoft, Apple, Amazon, they're not going to back down on such a high profitable return on capital market. I mean, look at the margins. We're looking at over 50 to 60% margins. Yes, Nvidia has its own moat, and it can price a lot of these chips at a higher level so that it does have a lot of pricing power, but there's still going to be competition, in my opinion. AMD is coming on board online with their own chips later this year when it comes to artificial intelligence and GPUs and CPUs. Not to mention, we learned from Microsoft that's also going to be interested in making their own chips for artificial intelligence. So there is certainly going to be a level of competition. We learned from Raymond James. They mentioned that 85% plus market share is possible, but that's still a pretty dominant market share, right? If that starts to come down, that obviously is going to slow down in the growth rate for the revenues. Look, it's kind of an interesting thing, which we have talked about, and Peter Lynch talks about it in his books as well. Expansion is not the same as growth, right? A company can still grow in a contracting industry, right? So even if the industry as a whole is contracting, right, the company can still grow. How is that possible? They can do a lot of financial engineering, right? They can buy back shares. They can do a lot of acquisitions. They can do different things to grow the company and grow the numbers of the company within a contracting industry. The opposite is also true. A company can decline in a growing industry, right? So artificial intelligence is a growing sector. It's the hottest sector. It's a very, very fast growing industry. Nvidia is definitely taking a huge chunk of that market, and it's growing, as we can see, very significantly, up 200-300% in revenues. But that growth rate, right, is going to be susceptible to lower rates moving forward as numbers get bigger and bigger and bigger, right? So from $60 billion next year, in order to maintain a 200% growth, they'll need to go from $60 billion to $180 billion. Do we really think that Nvidia can do $180 billion in next year? Probably not, right? They may get up to 100 billion, so they may almost double revenues, right? Depending on where the demand ends up being. So if it's at close to 100 billion, 110 billion, that's going to be close to 100% growth, and that again is phenomenal. And if the margins expand, we can expect the numbers to go from 28 billion to possibly over 50, 60 billion dollars, another 100% growth in net income. But over time, again, then we talk about 2025 and then 2026 and 2027, those numbers will start to decelerate. It's just, how the law of large numbers works, and it's happened with every company, Amazon, Apple, and now you'll notice the growth rates are not at, hundreds of percents. They're now closer to 20 and 10%, more normalized level considering how big the company has gotten. So, if we account for, let's say, $28 billion for this year, fiscal year 2024, and, the growth rate, we assume a very reasonable, let's say, 20%. Okay, and I give the company a 20 times price earnings multiple as well. 12% discount rate, and we come down with a 10% margin of safety, we're still going to be at $288, so sub $300. That's been the level that we have talked about. But it really depends also on the price earnings multiple. So look what happens if I bump this up to 25 times earnings multiple. Now we're looking at $360. Just with the 5-point move in the actual price earnings multiple. So 20 is going to put us at 288. 25 is going to put us at 360. That's a pretty significant, change in the overall fair value. I'm still going to go with a little bit of a conservative approach and go with 20, because I just feel Nvidia, as great of a company it is, man, it is like literally A+, no doubt about it. Like it's 9.5 out of 10 in terms of its business and the industry that it operates in, the margins, the growth, the balance sheet, the management, everything kind of checks all the boxes. The only thing that concerns me is the valuation right now and the multiple compression risk. Look, I have SMH, right? I've had a lot of Nvidia in the past, and I have SMH as well, which obviously is taking advantage of the semiconductor sector and the industry as a whole. But from an individual stock perspective, I just can't, in my right conscience, know that, okay, at $400, at $450, or at just under $500, I can make a justification that, okay, Nvidia is fairly priced, because I don't think personally that it is. If you try to match these numbers, so let's say that Nvidia price earnings multiple at 25 long term is reasonable, and then if you try to match these numbers here, 25% growth or 30% growth, or let's just do 28%, there we go. So Nvidia would need to grow net income by 28% after this year, over the next 5 years, in order to justify today's evaluation, meaning that next year they would need to do just under 36 billion. And look, they may do 36 billion and significantly higher next year. But the question isn't just about next year. It's about next 5 years or next 10 years. Can Nvidia do $100 billion in net income 5 years later? They can. They could. But are they going to, right? That's the real question that we're trying to answer. So given my expectations of earnings growth here with a very, very reasonable and conservative estimates, I'd rather be conservative and right than be aggressive and wrong, something that I've mentioned over and over again. I'm going to be more or less comfortable sub $300. Sub $300 is going to be an ideal price for me for Nvidia, and this right here is the sensitivity grid that you can obviously access and take a look, depending on the different growth rates, where the price ends up sitting. So if you do believe a 30 times multiple and a 28% growth rate is appropriate, then of course Nvidia would be argued as undervalued. It would be sitting at $600 almost at the fair value here, 596 at the bottom right of that quadrant. But if you are very conservative, then of course you're going to be at the top left of this quadrant as well for Nvidia. But let me know your thoughts down in the comment section below. In terms of technicals, we have mostly been trading sideways. There's a lot of consolidation happening for Nvidia. So this right here is really the overall pattern where it's just been trading sideways here in that range. And of course, if we do see a little bit of that pullback, next support is going to be all the way down here to as low as low 400s for Nvidia as well. Another thing I want to mention is, folks, don't forget, we do have the Thanksgiving sale and the new psychology course available for you to join and access. There's 4 courses now: fundamental analysis, technicals, options, and psychology. 50% off for Thanksgiving. Coupon code is going to be Thanksgiving, and the link's going to be down below. And also the Black Friday sale from TradingView, 70% off if you want to join. Link's going to be down below for that as well. So that's where we are with Nvidia. Let me know your thoughts down in the comment section below. And I think it's going to be very important to understand what the next 5 years look like for Nvidia. Not the next 1 year, but the next 5 years and 10 years look like for Nvidia. So I hope you all enjoyed this video. Found it helpful. Make sure that you drop a like, subscribe to the channel. As always, happy investing. I'll see you all in the next video.